Imagine and you can create. Once the stuff of bankers, now in the hands of the individual. That's what's happening in the digital world of blockchain and crypto. Decentralization of an asset is truly just imagination away. Welcome to Word on the Block, the series that takes a deeper dive into blockchain and the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast.News. I'm editor-in-chief Angie Lau. There's a Japanese proverb that goes like this: fall down 7 times, stand up 8. Throughout its existence, Bitcoin has crashed, but it has always come back. Will it do it again? One thing's for certain: the cryptocurrency market is no longer just about Bitcoin. In fact, it's not even about altcoins anymore. From meme coins to stable coins, DeFi and NFTs, the cryptocurrency industry has been completely revolutionized by smart contracts. And in times of market volatility, now investors have the option to trade tokenized stocks or commodities like lumber. And who else can better explain all these creative financial instruments in the crypto industry today? In fact, in many cases, he's leading it. The man that pioneered it all, FTX CEO Sam Bankman-Fried, who also goes by SBF, joining us on the show today. Sam, welcome to Word on the Block.
Thanks for having me.
All right, quick question, Sam, before we start. Did you sleep at the office again last night?
It's a little bit of a definitional issue, I guess. To the extent that there's an answer to it, the answer is yes. So it's been a busy few days.
You could say that again. The busy few days have seen $1 trillion worth of market cap wiped off. We're seeing a little bit of recovery. I guess a lot of your team probably also slept at the office.
Yeah, certainly the developers. I think it was sort of a late night. It was actually surprisingly so. I mean, a year ago, a little over a year ago, was sort of the the March 12th incident, and it was way smaller in notional terms, although moderately larger in percentage terms. That crash, but it was way more brutal for us and for the industry in general. I think the industry, because just a lot of businesses were maybe bankrupt at the bottom briefly. And I think for us, because our systems were just not as battle tested, and they broke a lot more. So we had like 2 weeks of sort of like just nothing but customer support backlog from that day. It was not an easy period. This was a busy last few days, but I mean, we had like a day of backlog, not a month. And so it was, it was busy, but it wasn't anything like what we saw last year in terms of what, the fires we had to put out.
Battle tested, to be sure, but a lot of other exchanges potentially not so lucky. And certainly the people who are trying to get access to the account and make trades suddenly didn't get access. I mean, where are we in the industry? That's got to be a black eye.
Yeah.
Whether it was just across the industry, truly a black eye. Even if you at FTX just had a little speed bump.
Yeah, I mean, I think it's one of these things where when an eye gets blackened enough times, you sort of punch it again. It's almost not an update for a lot of people, I think, because this is like, this is really busy day number like 17 in a row that half the exchanges crashed, and it's the same exchanges every time. I mean, it's not like, it's not super random. Like you if you know how much volume is going to trade on a day, you're gonna have a pretty good guess at which exchanges are going to make it and which ones are going to be down for a third of the day. And but it's not a good look. I mean, it's this is something I think fully realize before starting FTX. I think I definitely had a conversation with sort of like founding members and developers. When we're building FTX, and it's sort of my sense, I think what I said was, look, guys, if we can get like 95% uptime, that's pretty good. Obviously 100 is better, but like, look, 95, that's not the thing to focus on anymore. Like, that's pretty close to 100. And we should focus on doing other things, maybe come back to that later. That was not right. That was not the right way to look at it. If you have 95% update time, that means you're spending 5% of your day getting death threats. And that's a lot to spend. And so it's, especially when there's leverage involved, but just in general, customers care really deeply about being able to
Of
access
course.
their accounts during the most volatile times. I definitely underestimated that when we started FTX. I think that was something that over the last year we had to kind of circle back on and sort of say, all right, like revising our plan. I mean, we gotten up to 99.99, but that's not enough. Like there are two more nines we needed. And so I think it's just over the last 6 months or so that we finally rolled out a set of features that mean that there's basically not downtime anymore on FTX.
I mean, that's critical. That's critical because, in the most volatile moments, that's exactly when people need to be guaranteed access.
Yeah.
Do you think that this is an industry problem that will continue to experience, or do you think people are learning their lessons in the same way that you recognized you got to get to 100?
I I think people are getting better, but really fucking slowly. Every day it gets 1 basis point better. In 5 years, I think the downtime situation is going to look better. Next time there's a busy day, Coinbase is going down again. It just happens every time. And so I think people are aware of this. They're working on it. They're not working on it at the pace that I think we sometimes feel like it makes sense to work on things. I think they're working on it at sort of uh, the pace that seems fast from like a large ossified company standpoint, maybe. But I do think people are aware and trying to make progress. I think it's like when something happens enough times in a row, you sort of lose the sort of explanation of like, oh, they just like weren't aware. Like at some point, there's like obviously they're aware that this is going to happen next time. And so the question is like, why isn't it fixed, right? Like why does it keep crashing then? And I think that like a lot of what this goes to is like what is part of it is like what is actually the expertise of these companies, right? Is the expertise building complicated technical systems? That's not always the answer, right? Like some of them have unbelievably valuable strengths. Those that doesn't have to be one of them, but I mean that's not the only thing that matters. I think another thing that's worth noting here is it actually hard to run a crypto exchange. It's I don't think it's the hardest business in the world, but it's a more complex business than I think a lot of people would think of an exchange as being, because it's not just a matching engine. Like if your goal is just to keep a matching engine online, it's substantially easier. The really tricky thing is the integration with the risk engine, the liquidation engine, the deposits, the withdrawals, the transfers. And the problem is all of those are codependent on each other. If you fiddle with any parameter, any one of those, you sort of have to recompute every other part of the person's account. Um, and so you run into this thing where like between every single fucking tick that you process, right? Because every tick changes the mark price of Bitcoin by like a bit. And all of a sudden, who knows who's going to get liquidated? Now, you have to recompute the world. Maybe not quite that, but it's easy to get into these situations where like you're basically having to recompute every single part of every risk check and every deposit withdrawal check after every single thing that you process. And that's a way more intense problem than just matching orders. And I think that's why you often see these throughput issues. It's not easy to build out capacity for that. You can't just buy more computers because you can't parallelize this. Like it's all interdependent.
And it really means that those developers are staying up overnight along with you, trying to keep up with these recalculations and these reformulations and program that to that level of efficiency.
Yeah, there's a lot of that. There's also a lot you have to do ahead of time. If you actually want zero
Yeah.
downtime, you can't wait until it breaks and fix it, right? It has to not break in the first place. And some things can break, right? Like if withdrawals are down for 30 seconds, no one cares that much, right? People's
Mm-hmm.
expectations are that it takes, 15 minutes to do withdrawal on average. And so that's the sort of thing where if you have various road bumps, um, speed bumps, I don't know what road bump is. Uh, that's okay. And you can be firefighting that in real time. You have minutes, you don't have hours to spare there, but you have minutes. But when it comes to the matching engine, you have maybe seconds if you're lucky. And so you can't, like, you do have to be there patching in real time, but you're really sad. If it gets to that point,
Yeah.
your customers are sad. You really need to have gotten it to the
Beyond
point where it
sad.
doesn't need patching in real time.
So you're saying that this was a stress test moment and those crypto exchanges, and you learned that lesson a year ago.
Yeah,
I But so did a lot of people. And, this is another stress test. The question
yeah,
is, it's not how do you pass next time, is if your customers trust you enough to let you pass the next time. That's really the question that the
yeah.
whole industry really needs to ask itself. I want to ask you, for all of the customers, and the world is looking at crypto. Uh, and there's a lot of people that said, "I told you so." Um, what do you think triggered this massive correction slash meltdown slash crash of Bitcoin?
Yeah, I mean, I think what triggered it is almost a boring question, and like it's like I don't know, things went down a percent. Who knows why? Right? Someone sneezed. Um, the interesting thing is what happened to the next 29%, and
Hmm.
and I think what happens is whatever Bitcoin's just kind of wiggling around. It has a little bit bigger wiggle than normal, and someone gets liquidated for $500,000 position, and all of a sudden it's down another 20 basis points, and it liquidates someone else, and then you start to get this cascade, and that's really what happened. Like the bulk of what happened was once you got the first liquidation, it triggered the second, which triggered the third, which triggered the fourth, which triggered the fifth, and before you know it, $20 billion has been liquidated. And if
Yeah.
you actually want to sell $20 billion of crypto, yes, you are going to crash markets if you do that in a day. um and so I think that was sort of the core thing that happened, was for whatever reason, this process started, and then once it started, um, it was self-sustaining.
Mm.
And there's just sort of this like this ratio that comes out, which is like you can look at basically per percent that Bitcoin goes down, how many notional positions need have new liquidations triggered, right? For how many was that where their maintenance margin threshold was? Um, and then you can look at what's the impact of that size of position, right? Is it more or less than a percent? And if it's less than a percent, you have exponentially decaying liquidations that peter out. If it's more than a percent, then each liquidation moves things down more than the previous one, and you have an exponentially growing chain of liquidations. And so it's like this really, really on a knife's edge threshold. And if you go from like 0.9 to 1.1, you go from like yesterday being a 3% down day to being a 30% down day. Because
Mm.
there's the other $19 billion of positions that don't have to get liquidated if you don't drive things down that first 5%.
That scenario is very familiar to regular equity exchanges around the world, these flash crash moments. And then there are stop measures put in place. In a decentralized world, when people are holding Bitcoin and cryptocurrency, it was this a flash crash that we're going to see recovery in? What could have been put into place? And also, did you see different behaviors from retail investors versus institutional and traditional investors, which is um, what we're hearing from a number of sources?
Yeah, so you know, you can try and put speed bumps in, and I think it's correct to have something there. Like your goal is to catch misclicks, basically, right? Like your goal is to stop anything that wasn't supposed to happen. If someone's just sitting there trying to sell, like they're gonna sell eventually. You can't stop. Um, the goal is just to catch errors, um, catch erroneous orders and things like that. Um, I the thing though that you get, um, is that there are a lot of people who sold and didn't want to sell yesterday or 2 days ago, I guess now at this point, right? So they got liquidated. They weren't intending, they wanted to keep the position. But the problem is that once things are down, it's like you can try and stall, right? But stalling is super dangerous because what if things keep going down? You still need to liquidate the account. Stalling didn't get you anything, except now the account might be bankrupt. And now all of a sudden there's a loss, right? Like someone's gonna have to eat that negative number. And so it's actually not super safe to like try to wait too long before liquidating. You have to do it before the account would go under. And that puts a lot of pressure on the exchanges. And I I think what you have in the end I don't think there was anything really fundamental that changed from 3 days ago to today. I don't think this was caused by the world changing its mind on crypto, right? I don't think it was really caused by economic fundamentals. I think it was 10% of it was that, 90% just liquidations. Um,
Mm,
and so it's sort of an accident, but it was a huge accident. And it happened.
mm,
And what you end up with is this really, really weird situation where if you manage to turn off every exchange at once and just like manually pick up all like the markets and move them up 10% and set them down with absolutely thin volume, nothing there, right? And it said 3, 2, 1, go. All of a sudden things recover immediately because you no longer need to liquidate anyone. Technically, everyone's above water again. The selling all of a sudden stops, the buying comes in, and it goes right back on. And the key thing is you stopped yourself from having to process those sellers with liquidation permanently, or at least some for a while at least. Um,
mm.
and so you do get these weird effects where like it's state based. Like this is not the kind of thing where like the initial conditions don't matter. It's like you figure out what everyone's opinion is and then kind of average them together, and that's how markets work. Like there's some people are sometimes voting against their opinion because they have no choice. That's how liquidations work. And and I think that's like a really key part of crypto markets. It's true in every market, but it's really true in crypto markets. I think it's way more true in crypto markets than in most markets.
I mean, there's a psychological factor. There's no doubt about it. Retail investors are sitting right next to whales and institutional dollars that really propped up the prices. Uh, did you see them behave differently at FTX?
Yeah, so it's weird. Like the words retail and institutional have this like somewhat clearly defined meaning in equities, right? Like, my uncle is retail and
Right,
Fidelity is an institution. And no one's gonna get
right.
those confused. In crypto, a lot of the volume comes from people where it's like it's just a little bit unclear, right? They got like
Hmm.
two guys working together in a basement somewhere, combined age 40, combined wealth 40 million, and they have a corporate entity. Is that an institution? Like where their money came from, they bought the Ethereum ICO. And now they spend all day trading $200 million a day of volume in crypto markets, right? It's not it's not really what you mean by retail, but it's also not really an institution. It's sort of like a day, like sort of like you know, a day trader blown up to
A
epic
day trader
proportion, right? But
with
blown up
massive
to
capital.
massive, right? Like day traders
Yep,
don't trade hundreds of millions of dollars in most markets, right? They trade
yep.
thousands or tens of thousands of dollars, maybe a million, but $500 million from a day trader, yeah, that happens in crypto. It just does,
Yeah,
and
it does. You're totally right.
so
It happens in crypto all the time.
that's one of these weird things, right? When you say like, what were different parties doing? Like, boy, you know, I mean, I can tell you what the banks were doing. They were doing fucking nothing, right? Because they don't operate on that time scale, right? Anyone who's what you really mean by institution, right? Like sort of like a highly regulated, like customer facing thing that has lots of funds operate on a week time scale, right? They're not going to be like they're sort of like mostly sitting out something like this, and they're sort of like getting back into work today and be like, all right, like, do we want to consider putting a position on, right? Um, I but if you look at who was active during that day, um, I mean, you look at the HFT firms, right? And like, I mean, you can kind of guess what they're doing. They're doing the normal thing, right? Like, I don't know, probably had a good day. That'd be my guess. Um, you can look at the people who put on directional bets, and that's a lot. Are I think like Three Arrows is like a good example of this, right? Like, is Three Arrow like how do you classify them? They're sort of like, you know, I think institution is probably the better word. But they have a really unique style, of how they think about crypto. And, I mean, just looking at how they tweet about things, like I have no clue what they're doing, right? But you look at that whole class of people, and like some of them, I think probably just bought the dip for massive size. I think some of them probably were the dip because they were getting liquidated. Probably not the ones you've heard of, right? But some, I mean, whatever, the $20 billion got looked at, that'd be someone, right? It's not all your uncle. Um, so, they're on both sides of that trade. They being sort of this collective class of like day traders extraordinaire and or sort of like crypto specific delta taking three-man shops. Um, it's super interesting, and I think really the answer in the end is that it's it's an interesting messy marketplace, and it's uh uh what position you had coming in has really big impact on where you come out.
How do you navigate this? I mean, for somebody who just takes a look at this world and you see you're in it every day. I mean, you're the you're the oracle that notices these trends, and then you create products. But as you're in it, how would you characterize the points in which people should think about and use as navigational points? Because you're totally right. This is not an equity market. This is not a traditional styled. When we talk about fundamentals, that it's like comparing apples to rocket ships,
Right.
frankly. So, but how? I mean, that liquidity coming into the market is also super important for growth.
Yeah.
So, how does one navigate smartly?
Yeah. I mean, it's really it's interesting. It's dynamic. It's really dynamic.
Mm,
It turns on a dime, and
yep.
I think that like when we think about what to build, right? What products to be building here and how to design them. One unfair superpower that we have that like ICE doesn't have, CME doesn't have, is our customers are tweeting at us all day, telling us what they want. Right now,
Mm,
that's like just one example, but like, boy, are they vocal, and we appreciate that, right? Like we can often get a pretty good sign of what people would want just by listening to what they volunteer. Um, and so I think that that's one piece of this, and you will sometimes just hear a cacophony of random stuff and have no idea what to do, right? And like someone will be really pushing you. They're like, you need the Matic BTC market. Like that's the thing your exchange needs. We're like, no, I mean, wouldn't be bad. Takes a little matching engine capacity. I don't know, probably have like a few $1 million a day of volume. I don't know, sort of on the fence. But someone will feel really strongly about that. Occasionally they're right. Like occasionally it's like, oh god, no, that was a market we needed. Like clearly that was actually what everyone was waiting for. Um, and that's really our job is above and beyond everything else, identify the thing that everyone actually really fucking wants, even if they haven't quite figured out how to ask for it yet. I think Trump futures was like one good example of that. Like no one asked for that,
mm,
we just built it
yeah.
and had no traction for 6 months, and then the election got near, and all of a sudden, like traffic numbers just blew up on FTX because of it. And so I think like a lot of this is trying to figure out like what do we think people will want, what fits what they're saying, um, and I, and how do we take the feedback that we're getting and turn it into something actionable? And, sometimes we'll get feedback that just seems like it makes no sense. Like they'll be like, I really want to be able to like do this type of trade. You're like, that trade is nonsensical. Like, I mean, like you're literally just burning fees. Like, sure, but why would you want to do that? Like, no, really, and we'll go back and forth for like 20 minutes and it'll be super frustrating. And what's actually going on is not that they want to do that trade. What's actually going on is they don't like using the product for like they come away unhappy and they don't know why. It just wasn't fun. It wasn't clean. Like something was bad. Something's irking them and they don't know where to place it. And they end up sort of pointing at a random thing, just like tangentially maybe related, not actually the thing that is really core bothering them, but there was something that they picked up on implicitly that was bothering them. And a lot of our job is to pick that apart and figure out what that factor really is, figure out what actually is the thing that we need to do here. And I think like one example of this, which I've sort of know I've said before, but one of the more powerful examples of this was the sub account switching bar. So a lot of people really complained about not having a particular type of isolated margin on FTX. We're like, guys, we have it. You just put in two different sub accounts that isolates. They're like, nah, that's not what I mean. I want to isolate. We're like, yes, you can isolate. They're like, no, it has to be isolated. We're like, yeah, you can do it. Like, nah. And it just went back and forth, and we were like very confused. And eventually, what we realized was it took 4 clicks to switch sub accounts. That's too many fucking clicks. Like, yes, you could
Mm,
isolate your positions if you're willing to click 4 times to switch which
mm-hmm.
position you're accessing, but no one wants to do that. And so in practice, everyone was like asking for something else that would have made no sense because like the way we done it also wasn't any good. And like the actual solution there was just to put a bar on every trading page. It's just like has lists your sub accounts, has a button for each one, and you just like click on the
And they
sub.
were happy.
Yeah, all of a sudden I was like, oh yeah, it's solved. Like this is great now. I'm like, that's not what we asked for, and they're like, yeah, I'm happy now. That's fine.
That is major EQ, Sam. I
I
mean,
mean, it
that
took
is,
us a
they're
long time. Like
listening.
we had a lot of really consternated conversations, but before we sort of like figured out what was going on there.
And you step back and you went, what are they really trying to say? So you're part couch therapist,
Yep.
part solution oracle, part translator, because what they're saying is not what they actually mean. And
Yeah.
then you come up with a solution that answers the thing that they were trying to communicate but didn't know how.
Yeah. And
Is that how you came up with lumber futures?
yes.
I mean, where did this come from?
Yeah, that one honestly, like that one was a dead obvious one from some perspective. We just looked on Twitter, it's like half our Twitter feed was people asking for lumber futures. Like just like there just came a moment, the world all got together and like fucking lumber, that's what we're trading today. And everyone's just asking explicitly for lumber futures, and we're like, all right, fine, we'll do lumber futures. That's what we want now. We hear you guys. So sometimes it's like very
West
very
Coast of
explicit.
North America is super happy right now.
Yep. But I think one thing we're saying, it's not that people are like particularly bad in crypto at understanding what they want. I think people often understand exactly what they want, but like everywhere, they often do and sometimes don't. But when they do, those are the things everyone does. Like everyone has realized that they want a Bitcoin future, right? Everyone wants to trade those, so exchanges list those, right? And like listening to people saying like we want Bitcoin futures, like yes, obviously we have Bitcoin futures, right? Like there's the things that you're already doing, and everyone's already doing, which are the things that people know how to communicate, and often the cutting edge. The reason it's cutting edge instead of discovered territory is because it's one of those things that is hard to put your finger on.
To navigate the space feels almost too much if you're not familiar with it. How do you kind of wade in, or do you wade in, or do you just kind of dive in head first?
Yeah, just dive in.
What's the right analogy?
Yeah, I mean you can wade in. I don't think there's reason to. Like I don't think you're buying yourself anything by taking it slowly. I think you're just gonna have like a mediocre experience because you're not gonna have as much context as you want. And honestly, you're just prolonging that bad period, right? You're just drawing out the period of not knowing enough. I think you're not doing anyone a service. Um, I think like you don't have to dive in. Like a lot of people have great lives that doesn't involve knowing, what what the exchange owned by Paxos is called. That's totally fine.
Yeah.
I mean, I think Biden's got a lot on his plate. He probably doesn't know it, but it's okay. Certainly doesn't know FTX. It's fine with me. He's got some countries to worry about. I mean, but if you do want to get into crypto, like if that's what you decide, um, there's no point in half-assing it.
Dive in and get ready. Meme coins,
Yep.
altcoins. Is this a good thing? Is this a bad thing? Is it polluting the sanctity, the purity of crypto? Or is it kicking wide the doors and telling people to come on in? Water's just fine. And let's have some fun and gamify a few trades. What do you think?
It's got a little bit of a bunch of those. I don't. Dogecoin was amazing for recruitment for crypto. It got an enormous amount of interest in crypto. It also got a lot of sort of disgust of crypto. So it is a double-edged sword, right? Like it didn't. That came at a cost. I think in Dogecoin's case, it was worth the cost. I think for some other meme coins, it wasn't because it was there. The sword only really had one edge. I mean, most of these coins aren't getting anyone in. They're just pissing people off. But some of them are. And some of them obviously are great coins that are making people happy. I but I think the bigger thing is that this is not really a crypto thing. This is just a world thing. Like, this is happening in a lot of industries right now. And you look at what's happening in the stock market with like GameStop. I mean that's a cryptocurrency. It's not called one. I understand technically it's an equity, but like, come on, like that's a shitcoin. Like we all recognize it,
100%.
right?
Absolutely.
And I mean, I think like the I don't know if it's what the pandemic did to all of us, or if it's what we've always secretly wanted, or if it's what social media inevitably results in. But this sort of like very particular storm is one which stretches across across industries, and
Mhm.
um, you know, it's not even analogous. It's literally like it's not like both crypto and stocks have like their own charismatic guy who like when they tweet like the thing goes up. It's the same guy. Like it's like Elon Musk in both cases, right? And so it's like um it's been a weird year. I mean, I think it's been a weird year for everyone. Um, I think the big question is what's next year? Like, is this the new normal, or is this like what happened was everyone's like bored, stuck at home, socially isolating? Um, I mean, I think that was certainly a piece of what drove it, right? But
I mean, I think, the GameStop phenomenon, you're absolutely right about it. Everybody in crypto, everybody in the industry, in blockchain who's been in this for a couple of years recognized the characteristics.
yeah,
It just happened to happen in the equity space. But when the crowd moved, all the players who didn't hadn't participated in crypto, had no idea that there was a crowd functionality to trading,
yeah,
suddenly saw very, very specific calls
yeah,
flooded in with a certain position, and people,
yeah,
people lost their shirt, and people also made a ton of money. And the
mm,
funny thing was, it just wasn't the regular people who were
yeah,
making a ton of
and
money.
yeah,
And that's
or
what
well, some of
everybody,
right, some of the
yeah,
regular
cried foul.
people made a killing, but some of the regular people lost a killing, and it's sort of like it's sort of chaotic, and yeah,
Right.
and I think one of the big things here is one of the new things is if you look like 30 years ago, um, and you ask like what could like what could really drive a stock to go up an enormous amount, um, like if the mutual funds got together and all decided it was a blue chip stock that could do it, right? They collectively buy $30 billion of it, and and it go up a lot. If like a few retail traders did, right, like they bought $1 million combined, and it's like whatever, some institutions would sell it, they'd like get a slightly good price, that institutions make a little bit of money, and that would be that, and the stock would go back down the next day. And it's just like retail was not, to the extent retail was moving markets, is only in reaction to things media was that centralized media services were producing, and they're all moving in relation to. And then social media came around, whether it's Reddit or Twitter or 4chan or whatever your favorite vice is. And all of a sudden, for the first time, um you had 15 million day traders get together and talk to each other. Like, you can't have
Mm-hmm.
15 million friends get together and get lunch and then go pull out their app and trade. You can't fit 15 million people in a restaurant, especially
Mm-hmm.
during COVID. um
Mm-hmm.
but you can fit 15 million people on the same forum, and all of a sudden, if they each have $1,000 to trade, um now you have $15 billion between them, and they're
Yeah.
all talking, and they all kind of get together and decide that they're going to buy GameStop. Now all of a sudden you have a $15 billion buy order coming in collectively in GameStop. That's big enough to blow through. The institutions are just like, this is 10% rich, I'm going to sell. Well,
Yeah.
okay, that's
Yeah.
the first 1% of the inflows. Like, good luck
But
with.
there are rules. There are rules that prevent those mutual funds to talk to each other, for banks and different firms to collude with each other.
Yep.
There are rules, and that's what the SEC is for. And so that is a very highly policed and regulated market to protect the little people. But what happens when it's the little people?
Yeah,
The
and
little people, you and me, I'm not part of a huge firm with huge capital. I've got $100, $1,000. That's a lot of money to me. But now I have 15 million of my closest friends, and we're in on it together.
yeah,
By any happenstance, that is also colluding. But where the but that there
Right.
is in the world in which we lie.
And of course, it was never extremely clear exactly what the thing was that was and wasn't allowed. For instance, it's totally fine for a bunch of people to get together and have a factual debate about a bunch of companies and just say lots of true statements with the goal of figuring out truth, right? That's okay. And
Yeah.
maybe after you do that, everyone learns the truth, right? And everyone's like, okay, these were like, without trying to collude, everyone just comes away with the same impression. It's like, these arguments were great, these didn't hold up. And everyone just sort of comes away, and like 90% of people come away pretty bullish or pretty bearish. It's not exactly collusion, that wasn't the goal of it, but it is an activity that correlates their behavior, right? And um and so I think that like you get into this really tricky thing where really what the SEC is looking at here is intent. A core piece of this is, was the intent to do research and figure out the truth about the world, or was the intent to um, make sure you do what other people are doing, even if it has no relationship to the underlying products, because you will all win to each other's impact, right? But of course, the trading sometimes looks the same between those, right? It's like,
Yeah.
why were you doing it? And so with institutions for decades, you've seen the first, right? Like they don't
Hmm.
necessarily go and collude, but someone will write a research report on some company. It'll lay out a
That's right.
bunch
And
of
you're going
facts
to
about it.
read it. It's going to be in the newspaper or
Yeah,
the radio in the olden days,
yeah,
right? Or
all the
television,
mutual fund managers read the same research report, and they see the
right?
same, maybe legitimate set of bullish facts about some company, and like, they get to work, and a third of all mutual funds decide to buy that stock that day, right? And it wasn't trying to collude, but they're acting off of common information, and so not surprisingly, they make correlated decisions. Um,
Yeah.
and you really see this, right? Like, despite the fact, like, when it's on Wall Street, like, I never really heard people getting together to collude to do a trade in a manipulative way. Despite that, we'd wake up some days and the whole fucking world would be buying some ETF. Just like everyone. And like, what's going on? Like, how can like
Hmm.
these 7 brokers all have
Hmm.
decided today that this fund that they've never talked about before, they're gonna buy this, but there was real correlation. Um
Yeah.
and
Well, they probably saw somebody's giant position, and
exactly.
if that person was respected in the industry, somebody else followed on. Somebody else went, "I can't miss that."
Yeah,
Then followed on. Then half the market's in it, so everybody else has to follow.
exactly. Right,
That.
whatever. Warren Buffett
Yeah.
discloses in some form of regulatory filing that he got
Exactly.
really long some company, and then every right. And so, but then you look at sort of the retail side of this, and it's just all over the place, right? Like you're like, well, was
Mm.
it attempted manipulation, or was it sort of like, honest, wholesome communication of facts to try and get to the base truth of economic fundamentals? And the answer is,
Hmm.
there are 15 million people. They weren't all doing the same thing, right? Like 10, like 10,000 of them were literally colluding in an obviously illegal market manipulation sense. Like 50,000 of them were all getting sidetracked on the same red herring, trying to figure out the truth, but it was irrelevant. Like 100,000 figure out the same moderately relevant truth, but the whole world already knew it. 100,000 discovered on something moderately new, and right, and it's like, in the end, maybe they all make the same decision because they all hash it out, and like they see which way the wind is blowing. But like the thing that caused that correlation was not one thing; it was a complete mess of things that really
Yeah.
spans that spectrum.
But Sam, you and FTX and the industry. I mean, you represent what what is also part of this new normal. You're transforming access to some seriously specific plays once reserved for specialized
Yep.
brokerages and traders, to moms and pops, to the retail investor, to your uncle, to me. Uh, is that dangerous? What is the new normal?
I don't think anyone knows what the new normal is going to be. I mean, I think we're all just trying to be no more than a few years behind the times if we can get away with it. Um, but I may have to get a Snapchat soon because I heard that was a big thing in 2010. Um, but I mean, I don't know. But like it's I mean, being a little facetious, like I've spent a lot of time trying to get a sense of what's going on in markets.
Though honestly, there's probably a million people right now going to start new accounts if they haven't already on Snapchat just because you
Right.
said
I mean,
so.
yeah, sure, right? Like,
That's the thing. That's what's happening right now.
yeah, glad they're paying me enough for that. They're not, to be clear. I've never talked to Snapchat in my
We're joking. We're joking, guys.
life.
Yeah.
I but yeah. I mean, like, it's I I think it's really high upside. I think it's high potential. Um, that doesn't mean every step is going to be the right step. There's going to be some missteps there. Um, and I don't think anyone is ever going to succeed or should even think of it as a possibility to try and succeed at playing that perfectly. I think the goal that people should have in mind with this is um try to push in a net positive direction, right? Like, every step of the way, try and make things a little bit better. You do something so you think it'll be good, and if it's good, do a bit more of it. And if it turns out it didn't seem so good for the world, then take a step back, right? And you're not going to make every decision right. That's how it is. That's okay. But just keep trying to on the margin, probabilistically move in the good direction, and over time that's going to add up. And over time, sort of the missteps will get weeded out, and the right directions will be discovered. I think that's sort of the best that we can do here. To the extent that any of us are stewarding what is sort of an unstewardable force. Um,
But you got some pros on your side. Obviously, you come from experience, but you've got uh, some some strong bench strength as well. You recently hired from Citadel Securities Brett Harrison. You also added an HSBC executive, Jonathan Cheeseman, to head OTC and institutional sales. Where do you want to shape FTX to go? And it sounds like you're picking from the old world
so
to create a bridge to the new world.
that's a piece of it. Frankly, I'm super excited about that. There are other things as well, though you don't necessarily hear in the newspapers about, like, A plus memester hired to make some really sick Twitter posts, but they're fucking sick. I mean, I don't know. Blockfolio's Twitter posts are great. Um, and it's a reflection of what media talks about. What gets out there. But I think fundamentally, um, what I'd say is, like, one of the really biggest fundamental driving philosophies of FTX from the beginning was, like, maximize long-term expected value, and that probably most of the expected value is in the upside cases, like the far upside cases, which means that you're trying to maximize your odds of getting one of those real tail cases. And if you're doing that, you can't restrict the business too much in terms of what it's trying to do, right? Like, if you shoehorn yourself into the exchange that tries to serve institutions, the exchange that caters to low engagement retail, the Chinese exchange, the Korean exchange, the Australian exchange, the German exchange, right? If any one of those is what you see yourself as, it's what the world will see you as. It's what you will do, and you may do great at that demographic, and it's actually a really, really effective way to get moderately big. Like, it's way easier to get moderately big by being super focused on one demographic, so you can just, like, make every decision with them in mind. The problem is that you kind of hit a wall if you're not careful. Where you just, all right, now you got half of Germany, but, like, what's next, right? Like, is a really good path to becoming the 30th biggest exchange, but it's not clear what the path is from there to number five. Um, and so I think that, like, we sort of from the beginning, obviously, like, picked our battles, but really did come at it from the perspective of, like, in the end, we want to try and be huge, and we want to try and be the best product for as many people as we can be. And what that means is that we don't want to neglect any of them, certainly not permanently. And so we're pushing on a lot of fronts. We're doing a big institutional push. We're doing a big retail push. We're doing separate product related pushes for the power users that have made up a lot of our volume so far. And I frankly think the upside of those three demographics are not that dissimilar from each other. I think they're all
Hmm.
within an order of magnitude of each other in terms of how big they could get. And I'd be pretty sad if we just like lopped off a third of our upside arbitrarily at the beginning. So, we're pushing on all of them is the real answer.
I, I, I think there's a universal truth to that. There is a common thread, and that common thread is everybody's new to this space, and everybody wants to get pretty serious about it. What's next? I want to talk about Serum and DeFi and decentralized exchanges.
Yeah.
Is this what's next? I mean, you're a centralized exchange, for lack of a better word,
Yep.
at the moment. Are you going to disrupt yourself, disintermediate yourself? And what is Serum?
I In the end, it's the electrons world, and more power to them. No. So I think like um, you know, so maybe what is Serum starting there? Serum was originally the answer to a question, and that question is ignore 90% of all outcomes, only focus on the 10% of outcomes where DeFi is the most successful. Um, the 10% of outcomes where it's at least 50 times bigger than it is today. And in many of those cases, thousands of times bigger. Um, when you're selecting for those, when you're selecting for the cases where DeFi gets huge, um, what does the world look like? And in some sense, that's a hard question to answer. It's going the wrong way, right? It's sort of like, well, if you tell me what the world looks like, maybe I can predict how big DeFi will be. But like, how'd you go backwards there? But I think you actually can deduce some things, right? Like one thing. I mean, I think it's just like this single fact is like incredibly powerful. Um, how many transactions per second does DeFi have in that world? In the world where it gets huge, you can kind of answer that question without knowing anything else, right? You can just look at like what's it mean to get huge. I don't know, like it's got to be at least as big as Facebook, right? Like if all of DeFi put together is smaller than Facebook, it didn't get huge, right? And Facebook's got, I don't know, about a million transactions a second. And like, okay, fine. Who knows what Facebook is? How about Twitter? Yeah, it's also about a million. How about Visa? 50,000. NYSE, I don't know, hundreds of thousands. Like, whatever. You can look at a lot of different applications here, right? And you can kind of get a sense of like, what do I mean by getting huge? What would it look like to have that big of an ecosystem? I think the answer is 50,000 to 50 million transactions a second is sort of the range that spans. Um, so now you know that. Um, and now you actually know a lot about what the world looks like, right? Like you all of a sudden know things about blockchain, about the future of blockchain, if you get to presuppose that things get huge, right? You know that somehow there are blockchains that have probably a million transactions a second to be able to support that. Um, and then you look at sort of the existing blockchains, you're like, oh boy, that's not a million. And the problem is, it's not like a factor among many factors. Like if you're 5 orders of magnitude too slow, no other set of factors combined can make up for that, right? It's like you literally can't do it. Like you can't run anything big. You have an amazing GUI, but there's nothing on the GUI. There's no program running on it. So it's just like that's sort of like kind of a hard constraint, and so then we sort of said, all right, let's try and build out some infrastructure for that. Let's try and build
Mm-hmm.
out some infrastructure that would make sense as a first steps towards a world with a million transactions per second on chain. And what does that mean? It means you can have an exchange, an actual exchange, the more order book, and a
Yeah.
matching engine, not just an AMM, because you have the throughput and efficiency for it. So we built a DEX on. It means when you're looking at blockchains, sure as hell better have a long-term roadmap to getting to somewhere in the ballpark of a million transactions a second. It's about one blockchain ever built that does, Solana. Maybe someone will make a second one at some point. That'd be cool. So far they haven't. And so it's sort of like, I don't know, guess we're going on Solana. They're sort of like the only ones trying. Like the only ones trying to be big. Um, and you know,
Not
I
Ethereum, not anybody else. I mean, everybody's trying to be big.
well, they're trying to be medium sized, right? Like, what does big mean? What's like take your pick of another blockchain, and what's their roadmap for transactions per second,
Hmm.
right? When they say big, they mean 1,000. They mean getting to 1,000 transactions a second, and that's just not enough. That's enough to run current DeFi. That's what you can do with 1,000. You run current DeFi without insane gas costs. You can't do more than that.
Which is what we're experiencing. Yeah.
Right. And so, right, that's the thing, right? If you get up to 1,000, you can have like one small to medium-sized company running on the chain, and that will take the entire blockchain. That's what you get. Or you can have a bunch of tiny companies, or a bunch of AMMs. You're not going to have like a billion-person consumer product. That's going to overwhelm 1,000 transactions per second immediately. And I think that's just things like when people say fast, they just don't think very hard about what number fast means. And they say 1,000 fast, but 1,000 isn't fast. 1,000 is medium slow. And how many are trying to get actually fast, meaning hundreds of thousands at least. It's a pretty small list.
Next steps for you. We asked you when Coinbase did the direct listing. Do we see an FTX direct listing some point in the future? I mean, probably when Coinbase launched, and you even did the pre-IPO token on Coinbase. So, what are your thoughts there for yourself? If you're going to get that big, you're going to need a lot more capital potentially. Would you go to the market for it?
It's an interesting question. I mean, we'd be crazy not to be like doing due diligence on it, right? Like, we don't have any concrete plans there, but we're learning what we can, and kind of doing our homework. I think like one nice thing about the business we're in, and this applies to FTX, but it applies to other exchanges as well, at least some other ones, is that we're profitable. It's the expenses aren't that big, all things considered, and so we don't need to access public markets. We don't need to get more capital. We can keep doing what we're doing, and we keep trying to grow without that. We're getting more capital just from the business. So it's not like a sort of like thing where we're on a timer, and like if we don't list by then, we're going to be dead in the water. That being said, that's sort of like holding it to an insanely high bar. And I mean, the real question isn't like, do we need to, but should we? And I think like there's uses of capital. I mean, we acquired a Blockfolio last summer. Probably won't be the last acquisition we do. And I think closed an acquisition this week. And
Which was?
Not public yet. I think not public yet. I'm pretty sure it's not.
I tried, everybody.
You tried, huh? I'll look into whether I don't think
you'll let me know when you're ready.
Yeah. But I think like those are big ticket items and they can be super valuable. So, but I think the other thing is trying to figure out what it did to Coinbase's business. Like ignore the capital, ignore the money. What did it do to their business, right? Like did it grind them to a halt? Did it get them a huge number of counterparties? Did it get them a lot of trust? Did it get them a lot of ill will? I don't know. Like, it's not with priors on it, but seeing that play out has been interesting. And I think more generally what we're trying to get our heads around is like, what is the right business strategy for us in terms of building out a lot of the network and relationships and partners that are going to be really important for growing our business outside of the core dedicated crypto ecosystem.
Because one day they might be the same thing. What's
Exactly.
outside is inside, and what's inside is outside. It might just be what it is. We're in the transformation, the metamorphosis stage right now. There's no doubt. And Sam, you thank you for letting us into. If you're a butterfly flying away, thanks for letting us into your cocoon and sharing. Just how you see the world that you're shaping right now.
Yeah.
Before I let you go, I just had a thought. Can you pick something on your desk and show it to us?
Oh boy, so much random
we
crap
see
here.
you. There's so many people who just see you like this. But what you did was just really, I felt like we got to understand you a little bit better. And if you're willing to share.
Yeah, I don't know. So I definitely I need to fiddle with things compulsively. I go a little bit stir crazy. If I don't, and I mean, usually it's below the camera, right? They can't really see my hands, so which is intentional. But if you see me in person, it's incredibly rude sometimes. I mean, I'll just be like talking to someone like, you know. So anyway, it's like, I don't know, I have a bunch of things on my desk I use. I think recently I don't know, I've got some magic cards here. I'll just like kind of shuffle them while talking, and I think if you see my shoulders moving, sometimes you can't see my hands. That's what's going on. But um, I we played a little magic internally, did a draft at the company, and the
Can we do one right now? What are your magic cards? Do I have to like pick one or something like that?
the actual game is a bit longer, but right now it's serving its secondary purpose, although maybe eventually its primary purpose as a thing I can shuffle. Um, and I think that can occupy my hands and free my mind from worrying about them.
Well, I think it is a perfect metaphor for how people regard you, which is part magician, uh, part realist, but always moving. And we'll leave it there. Sam
Thank you.
Bankman-Fried, FTX CEO. Thanks for sharing with us here on Word on the Block.
Thanks for having me.
And thank you, everyone, for joining us on this conversation. It was great to have everyone here. I'm Forkast.News editor-in-chief Angie Lau. Until the next time.